Hola! In this session, I'm covering one of my favorite topics, multicurrency. I'm going to look at Xero files with multicurrency features. I'm going to look at exchange rates, currency gain or loss, foreign currency feed, contacts, tax rates, invoicing, billing, general transactions, and reports. It's assumed you have a basic knowledge of Xero, including creating contacts, sales, and purchases, so I won't spend a lot of time orientating you on my movements. However, I aim to thoroughly explain all aspects of multicurrency as it applies to the online accounting solution Xero. This information is of a general nature and you should seek advice for your own specific circumstances. Now, only the large Xero files have the multi-currency feature enabled. If you're on a small or medium plan, you'll need to upgrade your Xero file to the large plan. This will increase your monthly subscription payment, and the payment you make is dependent on the base country of your file. So you need to look at the Xero homepage to find what you'll end up paying. If you're an existing Xero file, if you have an existing Xero file, you'll need to upgrade to a large plan. So on your My Xero area, go to My Xero, and on the right hand side here, you would, under subscription column, is the option to upgrade. So you click on that link and follow the steps to commit to upgrading a file. If you decide you no longer require a large plan, let Xero support know, and it will take 30 days to drop your plan down to a medium or small plan. If you've not created your Xero file yet, when you go to purchase your Xero files for the first time, choose the option Large. This screenshot is for purchasing an Australian version. So if you're looking at it from another country, it might look different. Before I explore Xero, let's briefly talk about foreign exchange rates. An exchange rate is a relationship between country's base currency and another country's currency. So you can see here there are three currencies. 1 Australian dollar buys 59 pence or 0.59 sterling pounds. That's UK currency. 1 Australian dollar buys 1.15 Indian rupee, and 1 Australian dollar buys 91.20 Japanese yen. So a single Australian dollar buys different values of the unit of foreign currency. In Xero, the exchange rate feeds in from an organization called Xero.com. And as I'm recording this, the exchange rates are updated hourly. This means transactions in the affected management reports have exchange rates updating data hourly, which in turn means you're seeing timely realized and unrealized currency gains. It's very exciting because with minimal effort, your figures are reflecting a realistic value in a timely manner. But just in case you're concerned, you can at any time override the exchange rate feeds feeding in from Xero.com. You don't actually ever need to visit this website. I'm just showing it to you out of interest. Why might you want to override the exchange rates? You may decide you're going to use a different rate than the one provided by Xero.com. For example, I have a client who uses a single published rate for the entire month to minimize realized and unrealized currency gains. He's agreed this with his tax accountant and uses a rate published on the Australian Tax Office website. This may or may not be relevant for you. My recommendation is to keep it simple, minimize your administration time, and accept the Xero.com rates unless you have a strong reason not to. This is the Australian Taxation Office website, foreign exchange rates, and here you can click on to see daily published rates and monthly rates. Now, the other reason why you may need to override the Xero.com currency rate is that when the transaction, be it a sale or a purchase, is finalized, you need to use the actual exchange rate, which for the accuracy of your records, I recommend you do. Okay, I may have used some terminology in the last section that may be new to you. The concept of realized and unrealized currency gain or loss. Let me explain. When a transaction with a currency different to your base currency is initiated, it's linked to an exchange rate as at the date of the transaction. As the time goes on, the exchange rate inevitably moves in a positive or negative fashion, and this results in an unrealized movement that is either a gain or a loss. It's important management understand these movements, as it may have implications on when the transaction is finalized. Once the transaction is settled and the exchange rate is confirmed, a currency gain or loss is realized. Again, it's important management clearly understand, for example, the distinction between the profit on the sale and the realized currency gain on the sale. I've seen businesses operating with a favorable exchange rate movement thinking they're making a profit on what they were selling, when in fact they were simply making a profit on a favorable exchange rate movement. There's nothing wrong with this. But if you're working in an international environment, you need to understand the effect of exchange rate on your business and monitor relevant exchange rates. As you'll see, I think Xero can really assist with this. Let's add some foreign currency feeds to our large Xero file. This is quite simple to do. I'm in a Xero file, and this file has no transactions in it. I'll be working in an Australian-based file today. However, everything I cover is applicable to you, whatever country Xero file you're working on. My disclaimer is this information is current as at today when I record this, and I'm unaware of any scheduled or potential changes to the features I shall be covering on the Xero development roadmap. Let's add some currency feeds to the Xero file. Before a transaction can be created in a foreign currency, the currency feed needs to be active in Xero. To add a foreign currency feed to your Xero file, go to the menu bar and click on Settings, General Settings, and then on the bottom left, click on Currencies. You can see we have some currencies in here already, but I'll add a few more. Let's click the Add Currency button and click under the Select a Currency option. Let's select Canadian dollar. You can see that the Canadian dollar is coming from xe.com, and you can see the latest rate to the Australian dollar or the base currency. So it says the rates are updated each hour and most up-to-date mid-market rate from xe.com. I'll click the green Add Currency button to confirm I'm adding this to my file. Now let's add another currency. Click the Add Currency button, drop down option, and I just want to scroll through this so you can see how many different options of currencies that there are available. Let's add the Egyptian pound. Again, the rate here in relation to the Australian dollar pops up, and I'll click the green Add Currency button to accept this. So what we have here, you can see on the currencies dashboard the active currencies in the Xero file. You can see the exchange rate as per the day, today being the 22nd of September is highlighted here, and that you can see the units per Australian dollars and the units Australian dollars per unit, and if relevant there would be some notes here on the right hand side. Now, if you want to see an historical exchange rate, click in the calendar here and change the date. It can take a few seconds to update. As far as I'm aware, you can add as many currencies as you want, but I'd only add what was required to ensure optimum speed for Xero. This is one of the areas you can establish a currency feed into your Xero file, but later on in this session, I'll show you how you can add a feed during the creation of transactions. So, if you have a bank account set up in a foreign currency, you can also define their currency. Let's go to Settings, General Settings, and let's click on our chart of accounts. And here we have two accounts set up. So this is a typical Australian bank account set up there, and currency is Australian dollars. But here I have my Indian bank account, just selected an Indian bank account, but here the currency was Indian rupee. And I went through and I selected that. So to show you that, maybe I'll add a Canadian bank account, Bank of Canada, and I could come in here and choose Canadian dollars. I only have the option to choose the currency that's available to me. So there I have here on the right You'll notice that this says INR indicating that's in Indian rupee, and this says CAD indicating that's in Canadian dollars. Now the next thing I'd like to talk you through is about contacts. Click on contacts and go to all contacts. And here we're on the contacts dashboard. And I have some customers with the very imaginative name of Indian Rupee customer and Indian Rupee supplier. So if I click on my Indian Rupee customer and then click on my edit, down to the bottom left hand side, you see I actually have the currency option here. So this is the default currency that can be overridden on individual transactions. And I can select whatever currency is relevant for this particular customer and override it if necessary. All these things save time, and that's what I like, setting up processes to help me save time. Just so you're aware, I'm sure you believe me, but the Indian Rupee supplier also has the option to have a currency defined in there. So I'll click Save on that. So in summary, I have an Indian Rupee default currency feed against both my customer and my supplier. Obviously ridiculous names, but they suit this exercise. Again, to reiterate, both exchange rate feeds can be overridden where necessary. Now let's briefly touch on tax rates. Let's go to Settings, General Settings, and down on the left-hand side it says Tax Rates. So this is optional. This is completely optional. Some of my clients who with complicated multi-currency transactions do this to help them distinguish and group transactions. It's up to you whether you do this or not. Perhaps ask whom you would get consumer tax advice from, whether it would benefit your business. And seek advice for your own specific circumstances. Some of my clients like the tax rate to reflect the country they're dealing with. So for example, here, if they're dealing with Indian rupee, they would set up, let's click on it, INR export for the sales, and they'd set up INR import for the purchases. So I'm not doing this for taxation reasons. I'm doing this for management reports so that they can identify who are their Indian export and import contacts. Let's go and set up a multi-currency invoice. I'm sure you're waiting to do that. Let's go to our accounts, click on our sales, and let's create an invoice. So I'm going to click on New and type in Indian Rupee customer, Indian Rupee customer. And it's at today's date, which is sensational. I'll select a preset up item. I have widgets set up here. And now on the right here, the default tax rate for widgets came through, but I don't want that because I'm selling it overseas. So I'm choosing INR export. Okay, you can see the currency is tagged as a default exchange rate to this customer. So it came up as a default exchange rate to this customer. If I click on the exchange rate link, I could actually override it if it was relevant here. Notice also on the bottom right, beside the total row, the currency is also defined INR, being Indian Rupee dollars. And I want to click to approve this. So I've approved this, an invoice to an Indian customer with an exchange rate fed into it, and the amount is in Indian rupees. So notice now at the bottom, realized, unrealized, and net amounts. And these are all sitting at 0 because the exchange rate hasn't moved yet. There's no difference in the exchange rate at the moment, but maybe in a few hours or tomorrow, if the exchange rate moves, we will see a realized or unrealized gain here. We will see only an unrealized gain here. So now let's look at how this information is appearing in Xero. I think it's really important you don't just know how to use the Xero multi-currency feature, but you understand how transacting in foreign currencies affects your management reports, your decision-making process, and your business. Predicting foreign currency movements is very hard, but being alert to movement and understanding how they affect your business is essential if you want to trade overseas. At each stage of editing this transaction, I'm going to pop across to other tabs I have opened here. See how I have the tabs opened up the top along the top here? And review how the transactions has affected the balance sheet, the profit and loss, and the foreign currency gains and losses report. So I'm going to click on the balance sheet. Now, if you needed to go there, you would click on reports and then click on the balance sheet option there. Remember, I have no transactions in the file except for this single transaction. I'm going to click update, and you'll notice that the accounts receivable figure has popped up here, and there is a footnote. So this one is a footnote. And if I come down to the bottom here to the footnote, it says figures have been converted into Australian dollars using the following rate: 58.9725 Indian rupee per Australian dollars. The rates have been provided by Xero.com on 22nd of September 2013. So it's explaining what is happening with the balance sheet with this particular transaction. Now, let's go to the profit and loss. Looking at the profit and loss, remember profit and losses are normally shown on an accruals basis, and I'm going to reload the page so we have the information in it. You always need to, if you're working between pages, you always need to, when you go to another page, reload it so it refreshes the information. And what has happened here? In the profit and loss, it recognises that I have a sale of 127.18 Australian dollars in September. Now let's look at the foreign currency gains and losses report. So this is the final tab I have here, and I will click update. And what has happened here is it's simply identified that there is a balance here, 7500 Indian rupee, and in Australian dollars, this has equated to 127.18 with, again, another footnote here, and the footnote is the same. So tying all of that, what's happening in there is important. So now what I'm going to do is go back to the invoice. Remember, we've got this invoice sitting here, and it's dated, for me, this is today's date, the 22nd of September. And what I'm going to do is I'm actually going to backdate the invoice. So I'm going to pop into here, invoice options, click on edit, and I'm going to backdate the invoice to 1st of July. So this is the first of my financial year. You can see I'm going to change the date to the 30th of June. I'm changing the date to the 30th of June, and you can see that that has fed in with an exchange rate here, 54.4285, as at 30th of June. And I'm going to go update here. Now, what you'll notice at the bottom of the screen is realized remains unchanged, but I have unrealized with a red arrow beside it of 10.62. It's recognized a drop in the exchange rate equivalent that's affecting me by 10.62 Australian dollars. So this is unfavorable for me. Now let's look at the balance sheet and see what this has done for me on the balance sheet. I will click on update, and the accounts receivable remains unchanged, but you can see here I have current year earnings listed of 10.62. So the multi-currency report shows the accounts receivable and current year earnings of 10.62. So it's recognized that foreign currency loss there, giving you an overall retained earnings of 137.80. So it's actually recognizing the unrealized currency loss as it's happening. So now what I'm going to do is go back into the invoice again. Here's my invoice that I originally created, and this time I'm going to show you how to override an exchange rate if you need to. I'm not recommending this, I'm just showing you how to do it. So I'm clicking on the drop down arrow, clicking on edit, and here I can click on exchange rate, and I'll override it to 60. Okay. So I clicked on exchange rate and I overrode it to 60. So I'm going to now click update, and I'm clicking update, and you can see that it's now set by me. So I set that currency there. So the next step in this process is to receive payments against the foreign currency invoice. It's simply a matter of making a payment against the invoice. So down here I've got 7,500, but I'm just going to make a partial payment against this invoice, and I'll receipt the money on today's date, and I am going to have it come into the Australian bank account. And once the Australian bank account's flashed up there, an extra field appears. So I actually have to specify the exchange rate at this time. So I'm going to put in 80. 1 Australian dollars equals 80 Indian rupee. And I'm going to notice as I'm doing this, the unrealized is sitting there at 2.118. I'm going to add payment. The invoice will shut down and I need to go back in and click on top of it again. And you'll see here that I've got a realized gain, a realized loss here, an unrealized gain, and a net loss. So this is realized. That $5,000 Indian rupee payment against it has recognized a currency loss of $20.83 in Australian dollars, but with the outstanding 2,500 we're still waiting to receipt in, we have an unrealized Australian dollar gain of 0.73 cents. So it's really not very much at all, but overall that's giving us a currency loss since the date of starting this invoice on the 30th of June of $20.10. So that means when we first went into this transaction, we are now getting $20.10 Australian dollars less than we anticipated we would. Let's see how this has affected our reports. Popping up here and clicking on my balance sheet, and I'm going to refresh my balance sheet, and this has I now have this amount of money sitting in my Australian dollar account, which is in Australian dollars. I've still got the 2,500 rupee outstanding, and I have a current year earning of $20.11, which is a loss, current loss, and retained earnings there. Let's go and have a look at our profit and loss. Clicking on profit and loss, and I will refresh that. Now, so my profit and loss has recognized the sale here in June, and then it has a loss here in July. It has 12.76, so this is actually favorable, and then 9.51, which is unfavorable, and 23.35, which is unfavorable. So overall, I've got this expense of 20.11, so that's negative really for me, and that has reduced my profit by 20.11 at that point. And if I go and have a look at my foreign currency gains and losses report, I'm going to update that. And this is telling me that I have 2,500 Indian rupee balance. In Australian dollars, that's equivalent to $42.39. The realized gain so far is $20.83 negative. My unrealized gain, which is positive of 0.72. So if I closed it off today's rate, that would be 0.72. That's feeding into the system. My realized gain year to date is negative 20.83. My unrealized year to date is 0.72. Again, same figures. My foreign currency exposure is 0.72 Australian cents. And in the bank account, I have $62.50. Okay, let's pop back into the invoice again. I'm popping into the invoice, and before we finalize this, before I process the final payment against the invoice, let's have a look at what the actual invoice looks like when we if we were to send it out to someone. So this is just a very basic simple invoice here, Indian rupee customer, and you can see here the tax rate has been specified here, INR export, and then here in the total it has total INR, so that's Indian rupee, less the amount paid. So it's specifying the amount of Indian rupee due is that 2,500. So we're back at the original transaction, and we want to receive the full and final payment against this, which will be 2,500. This time, however, I'll receive it on today's date and I will receive it directly into my Indian rupee account. So there's no exchange rate applied to it. Remember last time when I pulled up the Australian bank account, an exchange rate option popped up there. So I don't have to apply an exchange rate to the transaction because it's a sales invoice in Indian rupee dollars and I'm receipting Indian rupee dollars against it into my Indian rupee dollar account. So I'm going to add payment there. So you can receive any currency against the transaction as long as you have an account that receives payment in that currency set up in Xero. If you've never worked with foreign currencies before, you might find it a little weird that I say that. But I find clients issue an invoice in US dollars one month and then the payment is receipted in US dollars. And then the next month its payment is in euros or yen or Australian dollars. Yes, it's annoying, but the reality of business. So good to know Xero can handle it. So our invoice is now closed off. I'll jump across and open it up so I can look at it. You can see now that it's closed, there is no unrealized amount there. There's no unrealized figure. The entire foreign currency movement is realized. So we had a realized loss of $20.11 Australian cents against this invoice. Let's look at our balance sheet. We can see the amount in Australian dollars in our bank account. We can also see the other amount in our Indian bank account. And our current year earning reflects this 2011, this negative foreign currency movement against that invoice. Let's look at our profit and loss. Update. And here in our profit and loss, the sale amount here, but the year to date, $20.11, which has been a loss, split out in July, August, and then the full amount recognized in September. And now let's look at our foreign currency gains and losses. So it's really good to look at this information isolated so you have a really clear understanding of when you have multiple transactions happening, what's going on. So our accounts receivable, Indian rupee, has zero balance at it. But due to that, there was a realized gain of $20.11. So a realized loss is saying gain there, but it's a realized loss of $20.11. And our bank accounts are sitting here, $62.50. And then in the Indian rupee, 2,500 Indian rupees, which is translated to 42.39. So that 42.39 is going to keep changing. Tomorrow it will be different. The next day it will be different. But that $20.11, that will stay the same. This would move, that will stay the same. Okay, so now you've seen the sale from creation to closure and explored how it affects management reports. As you can imagine, purchases will have a mirror effect, image effect. So I won't go through your basic purchase. However, what happens here in Australia when you purchase something, as well as the bill from the supplier, you get a separate bill from customs officers. And if you've seen a customs bill, it can be quite complicated. A customs bill is charging your business for the relevant consumer tax on the purchase. In your country, the terminology and procedure may be different. A customs bill is not actually in a foreign currency. It's normally in your base currency. However, the issue is the consumer tax. Here in Australia known as GST, but you may call it VAT or PST or something else. The consumer tax is totally distorted because instead of just being a percentage of the bill, it is practically all of the bill. Here is a customs bill I prepared earlier. You can see the GST is $500. The administrative charge is $20, and there's $2 GST charge on that administrative charge. The total bill is for $522. So you can see there's two lots of consumer tax I need to account for. The main bulk of it is simply listed as GST, and then the more typical amount associated with the administrative charge. It's really important to your cash flow you get this right because it means a refund of cash to your business. I've had a business process a bill like this as if the consumer tax was only 10% of the bill. So they were missing out on a massive amount of refunds on their consumer tax associated with purchasing overseas. You can see here, if I open this customs bill up, the consumer tax is allocated to the bulk to the consumer tax line. GST on imported purchases allocated directly to GST, and the administrative charge is allocated as you would typically record. So I'm going to click on approve on that one. Okay, so that's how you would record it when you have that bulk GST amount. Now, well, there are some other things that you need to be aware of when using multi-currency in Xero. If you're connected with a client via the Xero to Xero network, then if you send them an invoice to say in Fijian dollars, they have to have Fijian dollar currency active in their system to receipt your Fijian dollar invoice. That's only applicable to Xero users using the Xero to Xero network. You also can't associate a foreign currency with an item in Xero, and you don't have access to foreign currency feeds here in expense claims. Maybe that is a development that we'll see down the track. I wanted to just quickly show you, just in case you weren't aware, that you can add a foreign currency feed to an invoice while you're on the go. So I'm sitting here in my sales invoice, click on add currency, and this customer, even though he's the Indian rupee customer, he wants to receive this in US dollar, and I've simply added that, and I have that currency sitting in there. It's now in my Xero system. Okay, that was really quick and easy. I also want to show you how you can transfer currencies between your bank account. So I'm looking here at the dashboard. I'm looking here at my bank reconciliation screen, and $500 was received. And if I click here on select bank account and I choose I've received this from my Canadian bank account, I can come here and actually specify the rate, because this would actually be a particular rate. It says here the rate for 2nd of July is sitting at that rate, and I'll put in 1.04. Okay, and that's highlighting what that particular rate is for that Canadian dollars. And check that rate, I'm happy with that, and I'm going to reconcile there. Okay, and likewise I could have done the same with the Indian rate there, amount in Indian dollars, and I will reconcile that. Fantastic. Thanks for taking the time to watch this video. I hope you are now feeling confident using multi-currency in Xero.